What's up, man?
Yeah, what's good, bro?
Yeah, I received. I'm afraid 220 and 200K account.
You say
Two,
you
two
received
email,
you received what?
two email for phase two. Congratulations on
Oh,
the two,
oh,
on the
you finished
20K and
phase
the
one?
20K and 200K, like maybe almost 45 days. So I'm just taking it easy.
Yeah, that's good. That's good,
I'm
man.
telling you, man. I'm back in the game. If I can copy that shit word now, I'd be late, man. I just need like 1K a day.
Oh, that's good, but oh, congrats. Let's see, let me share the screen. So I'm still looking. I just sent a possible buy gold, but the issue with that, it was before market open. Let me see. Let me share the screen. So here I need gold to retrace back up and close. So this, yes, was the entry, but red flag 930, right? But I'm expecting gold to switch back up. This is a double SAR on the 30-minute. But also if we look at the 4-hour, what is this? Just a second. So this was the zone in the 4-hour time frame. We have a double SAR down here. 1 hour, nothing really other than all the way up here. So the only entry is on the, give me a second. Only entry might possibly be this 30-minute, but we need gold to shift back up. So probably wait for the 5-minute. Just 1 second. Let me change something here real quick. All right. Let me start recording this. So an entry for this would rather go on the 5-minute and see if we get a green SAR, live green SAR to be formed. But anyway, let me start recording this. All right, good morning, guys. Today is Thursday, August 24th. As usual, doing analysis for US 30, gold, and EU. So looking at what we have on the daily, so I've extended my lines there. Looking at our daily bias. So personally, I am sell bias for US 30 on the daily. I have a buy bias on gold. I have a sell bias on EU, and I have a buy bias on the dollar, right? So yesterday I went over how yesterday gold and the dollar were moving the same direction, right? But EU and gold were moving opposite. So not every time will you get that. As much as something is tied to the US dollar, it doesn't mean that every time when the US dollar goes up, the other instrument is going to go down. So we can see gold has been moving up. Now, as much as I'm biased for buys on gold, right, my entries are on the 4-hour. So this would have been at break even for anybody who took it. I'll go over this trade. So the only trade I'm in is this EU trade. I secured 80% down here, and I left a 20% runner at break even. Now for what was I going over? Now, if you go on the 4-hour and 1 hour on gold, you can see, right, because you identify your daily bias, and then you go down to the 4-hour and 1 hour and look for double SARs, at least double SARs in the 4-hour and 1 hour timeframes. So if you do that, for example, on gold, you could see that as much as I was bearish since yesterday, based off of my strategy, I have to wait for gold to get to 1908. So that's one way for gold to get to 1908, 1904 for me to think about buys. Or on the hourly time frame, gold would have to get to this zone up here, 1922. Was this hourly or was this a 4-hour? We had double SARs here, unless yeah, so on the 4-hour, either 1923 area, and you can see it touched there and rejected back down. So I would need two 4-hour candles to close up there. To the downside, I would need 2 4-hour candles to come here and reject up here so that it's a test and rejection. So on the 4-hour, as much as my bias for gold is bullish, right, on the 4-hour, there was nothing to be tapped. On the 1-hour, right here, there was nothing to be tapped also, because for me to buy on the 1-hour, we have a triple SAR right here. So for me to buy gold, have to go all the way to 1938, or come back down to 1896, 1895. So this is what I mean. As much as my bias is bullish for gold, I am, other than this buy that I'm trying to catch right here, so the 30-minute, the red flag with this trade, right, it was 30 minutes, I'm sorry, this entry candle was before New York Open. So if you're not in this trade, just wait on the retracement. I would rather, right, either you can get in now, it's a valid trade. For me, I'm not yet in this trade. I'm waiting for this 30-minute candle to come back up here, because I view this as manipulation. So this is the entry on the 30-minute time frame. But if you're using the 4-hour and 1-hour, you can see there was no entry for you to catch. Even if you're using the 30-minute, this was the only entry for you to catch on gold, unless you wanted to trade these 3 SARs right here, which you could have gotten burnt with. So if you wait for the 4-hour and 1-hour, right, if you always wait for price to get there, you'll get better entries. So here, for this trade, this so because I literally sent this before the market opened, so I don't know if anybody saw it, but I sent this, right? This was the setup, right? Possible test and rejection of this 30-minute buy SAR in the direction of the daily bias, right? So daily bias is bullish, but always ask yourself, right, as much as a trade validates, you should always ask yourself, right, what is the time that you're trading? So of course, if you get a trade that comes in again, right, I'm just marking the entry that could have been. If you get a trade that comes up literally during market open, is it a safe bet to take it? Probably not. So you might as well, either if you're going to take it, enter using, right, you can choose to enter using your whole risk, and then just know that you can easily get faked out and price goes all the way back up. So enter using that risk. Or if you're entering it, you can say, if I was risking 0.5% for this trade, I will first risk 0.25%. And then if the trade goes against me, I'll add the other 0.25%. So for me, if I was in this trade and I'd entered using a 0.25, I would have added another 0.25 on this single SAR zone. Now, the other way is to wait, right? To wait, if you waited now in this instance, sure, price is retracing and you could have waited now on an entry on the 5 minutes. So you could have been waiting right now to get a double 2 5-minute candle closing above a double SAR, or maybe a 1-minute candle. If you're not in this trade yet, I would say wait on the 1-minute time frame and wait for 2 1-minute candles, or you can just hop in on impulse. I'll let you guys know when to enter this trade, but I will be entering this trade and it will be an official trade. So I'm waiting for this 30-minute candle to be held up here, and then that's when I'll enter. So for me, yes, it was a valid trade even there, and you'd still be in drawdown, you'd still be in the trade. However, right, the 9:30 a.m. candle, you don't want to be trading literally at market open because you can get faked out. So I'm waiting for this. So you can either set a pending buy at 1914. I'm waiting for this candle or for this 30 minutes to be held. So let's see there. So I'm buying gold right now. So with a 0.5% risk, I'm going for a 1:2, and I'm basing it off of this test and rejection. So keep in mind, we already got the entry. We already got the validation for these 2 candles. The only red flag was the 9:30 a.m. right? So whether you entered at the 9:30 a.m. candle, you see you could have gotten close to being stopped out, but then right, trade would have been back in profit. So what we want to observe here, we want gold to be held above this zone. So at this point, right, remember, wicks always tell you a story. So these wicks are telling us that there's a lot of buyers here. So why am I buying gold? I'm buying gold primarily because our daily bias on gold is bullish. That's it. Luckily, even looking at the hourly time frame, we have this rejection on this static what is it called, static trend line. So this is I'm sorry, 30 pip stop loss, 60 pip TP. If you want to have a better risk to reward, put your stop loss below this previous low of this candle, or even below this SARs you're trading, that can give you maybe a 7 pip stop. So, right, if you really want to have a 7 pip stop, definitely will give you a better risk to reward than somebody like me who's using a 30 pip stop. But that's the key right there. So either stop loss below the SARs you're trading, which is this ones, or below the previous low. So in this instance, if you're trading before on the 30 a.m. 9:30 a.m. candle, you could have seen if you put your stop loss below the double SARs, you could have gotten faked out. If you put your stop loss below this the low of the previous candle, also you could have gotten faked out. But if you did like a 30 pip stop, which is what I have even right now on this trade, you could have survived. So whether you entered on impulse or even if you're in the trade with me right now. So I'll go back to the other trade. So US 30. Yesterday we went over this trade on US 30. So this was the entry. So US 30 pushed up from this zone and we were waiting to sell US 30 here. Now, in this instance, if you guys remember, if you're on the live session with us, we were waiting for 2 5-minute candles to close above I'm sorry, to close below. So we never got that entry until, if I remember correctly, it was either this candle right here. It was almost at during market closure or during 3 p.m. So the entry was somewhere here, and the trade went to like 1:1 or 1:1.5, and would have gone back to break even. Now, the entry came back again during London Open at 3 p.m., 3 a.m. Eastern time. So this candle closed all the way down and then broke and closed below this double SARs, double hourly SARs. The next hourly candle, you can see this selling pressure. So this is a break and continuation. So your entry would have been here. And this is one of those instances that I would have entered this trade on impulse. The reason for that, as much as it's the hourly time frame, the reason for that is the entry candle is close to the SARs you're trading. So if you're using like a 50 pip stop for US 30, you could see that, and gold is pumping up, you could see that this could have been so far, right? Your stop loss is so far away from the SARs you're trading. So even with a minimal to be right there above or to be above this previous candle, you could have gotten away with like a 30 pip stop and given yourself like a 30 pip stop and gone for like a 60 pip TP. So you achieve your nice 1:2. So remember, your stop loss distance is what will tell you whether you can achieve a 1:2, a 1:1, 1:3, etc. Anyway, so that was the trade right there. I didn't take this trade. I think I had the option of taking the US 30 trade, and I had the option of taking the EU trade. For me, I just chose to settle on the EU trade. So if you took this, you can see it came and achieved at least a 1:1, in which instance you could have set break even. So at any point here, you could have gotten stopped out at break even, and you can see right now US 30 is pumping up. So currently US 30, I am still bearish on US 30 until we get the same thing we got on gold 2 days ago. Now, one way we can start looking at US 30, let's see what's going on at the 4-hour time frame. If we expect US 30, if we're expecting US 30 to retrace back up, we would want, you see, on the 4-hour candle, yes, we've already formed a green SAR. So in the 4-hour time frame, if you want to catch an early retracement before we get the daily, now you have to be sure that we're about to get that daily push up. Now, if all your confluences are telling you that in the next week we are about to pump up on US 30, the 4-hour is telling you, give me some time and I can give you a closure above here. So you can see if you're using the same logic, for example, here, you could have, if you're buying US 30 here after getting this 4-hour, you can see how you could have gotten faked out. So this is why for me, I don't use the 4-hour for the daily bias. I just choose to stick to the daily bias, to the daily time frame to get that bias, because the daily will rarely fake you out. And the best thing with the daily, you can see, as much as we had the pop on gold yesterday, the entries on gold on the 4-hour and 1-hour are so right there below here. So as much as gold is bullish, if you go down to the 4-hour, to the 1-hour, and maybe to the 30-minute, but mostly the 4-hour and 1-hour, which I recommend, it won't burn you, because it will tell you, yes, I'm bullish, but wait for me to either keep pumping up or wait for me to retrace. So any questions? So right now, the only trade we are in is this gold trade right now. And again, congratulations to Audrey for passing 2 phase ones yesterday. So, he was just telling me before the call that it took him 45 days, right? So take your time, right? I always tell people, if you want to trade and if you want to make trading, whether it's a side hustle or full-time gig, take your time, because nobody really, I mean, maybe there are people like that, right? Depending on the account value that they have. But I wouldn't think that anybody with like who's funded 100K or even 50K, right, is making like 5,000 consistently a day. If they are, good for them. But for most people, that probably won't happen for them. But right, if you do the math, you just go slowly by slowly. You just have like a 30-day vision, 45-day vision, and you're consistent for 6 months. Hey, like you can start thinking of making this your side hustle, your full-time gig. And that's how you do. Anyway, any questions regarding anything we've went over? Any questions regarding on why we are buying gold? Any questions on why we are looking to sell US30? I'm not, right? There's no sell entry. So right now I'm bearish on US30, right? So this is how I'm analyzing US30. So US30 is telling me on the daily, I'm bearish. I haven't even given you a sign to start looking for buys. Okay. But then it's telling me go down to the 4-hour and look at what I've given you right there on the 4-hour time frame. So if I go down to the 4-hour time frame, the only sell entry on the 4-hour time frame is either all the way up here, and if US30 pumps all the way up here, the bias would have changed to daily. So I ignore that. Then the 4-hour is telling me I have these double SARs right here. So for you to sell, you'd have to wait for 8 hours or for 2 4-hour candles to close below there. What's the probability of that happening? At this point, I don't care, because it would have to take either 8 or 12 hours. Okay, so I move down to the 1-hour. What is the 1-hour telling me? The 1-hour is telling me, yes, we have these entries right here, and you already got the entries. Or I gave you the entries this morning and you'd have been out at break even. So for me to give you the same entry again, you would have to wait at the very least. It doesn't look like this hourly candle will close below this sell SAR. So US30 is telling me for the hourly entry, you might have to wait for 3 hours. So guess what I do? Gold has given me an entry right here. And sure, I can go down to the 30-minute and see what's going on there. For the 30-minute, we just have a lot. But for the 30-minute, if I was focusing, I can see a double SAR right here at 34,460. I can see triple SARs right here. So either way, for US30 is telling me you would have to wait for like 2 to 3 hours for me to give you an entry. But guess what? Gold already gave us an entry, and we are currently running up on gold. So that's 914. So we need to achieve a 1:1. Gold has to get to 14, that's 17.3, right? So this is the point gold will achieve that 1:1 right here. So when gold gets here, go ahead and set break even. So you can either hold your position or secure some, or just set break even or secure the whole profit, depending on where you are in your trading. But when gold reaches this point, personally, I will be setting break even for gold. And I know there was some news events today, like there was unemployment and all of that good stuff. I don't think I updated that in the group chat. And I hope you guys can hear me. I know Audrey could hear me in the beginning, but I just put my mic on. Copy this. Desire, at some point, I really want to hear about your journey, because you said you've been trading full time since 2020. It would be interesting to hear some of your thoughts on how everything has been going sometime. Because that's pretty good, right? Like you're 4 months into trading and you decided that, hey, I'm not looking back, I'm going all in and being a full-time trader. So that's amazing, man. That is amazing. I don't know if anybody, I don't know, is anybody in this gold trade with me? If you are, we are about to have that 1:1. Let's see. What else? What else? GBP, I know I mentioned GBP and ZD yesterday, so I'm in this trade as well with a 0.5% risk. My stop loss is 350 pips. My TP is 700 pips. If you want a slower or a lower TP, a lower stop loss, you can, I guess, put your stop loss above the previous daily high candle. So that will give you like a 200 pip stop. But for me, this is more of a swing trade. So that's why I have like a wide stop loss. So that's a GBP NZD trade, and I did send it as well yesterday in the Forex Majors group. So I said if GBP NZD closes with a sell signal based on the reversal indicator, that will be a sell entry with 350 to 750. Oh, this should be stop loss TP, my bad. Stop loss and TP. All right, so we need gold to push up. So now, if I go down to the 5-minute, I want to see so let me reduce the extension of the lines on the 5-minute. So I want to observe the live. There we go, right? So this is the live one that I'd said you can wait for, right? Because we were waiting also on the 5-minute. So for me, when it retraced up, that's when I entered and I asked you guys to enter as well. But if we didn't, now is when we would be waiting to enter, because I'd said either wait on the 5-minute, but because the trade was valid, that's a trade I could have taken on the 1-minute. So ideally, where we entered, and actually even looking back, where we entered lines up with this 1-minute entry, because we have two 1-minute candles closing above. So it sort of lines up there. But with the 5-minute, right, this is what I want to see. If we get this 5-minute closing this way, we should spike up on gold to at the very least achieve our nice 1:1 risk to reward. So this is the importance of trading with your bias, right? Have a bias and stick to it. The daily bias, and yeah, Audrey said is in the daily bias. Yes, right. Not every day. It's not going to give you trades for right? Like yesterday, it wasn't giving me trades for gold. It wasn't giving me trades for even US 30, I think, or gold mostly. But it gave us a trade for US 30. I don't know. Did it? Well, I forget what we traded yesterday. But anyway, it might not give you a trade in the short term, but as time keeps going on, it's going to create for you those SARs. So you can see the importance of, as much as the DXY is bullish, right? You would expect gold to be dropping, but EU, right? EU is dropping, possibly maybe GU is dropping, or whatever, another USD related object. But keep in mind, right? Just because the dollar is going up does not mean, yesterday we saw this in real time. The dollar was going up and gold was literally spiking up, right? While EU also was dipping down. So for me, all I do is look at this. So when I look at what the daily bias is telling me, I don't care what anything else is telling me. And keep in mind, you guys haven't seen me use the order blocks recently, right? Because at first I would really want to stress test this strategy, and if it works for me better than the other strategies, maybe I'll just stick to the SAR strategy. If it works for me and I see maybe there's benefit of bringing in supply and demand, I'll bring back in the zones on my charts. If I see it's nicely used with the crosses indicator, I'll bring that in as well. But until that, I don't want anything else to interfere with. Even for the trend lines, really, I just draw them, but I don't look at them, right? Like if my daily bias is telling me to buy and my hourly trend line is showing me a sell, guess what I'll do? I'll just buy, because keep in mind, first I want to stress test this, right? I want to stress test this. I want to stress test my daily bias. And so far, by following the daily bias, I really haven't, it really hasn't failed me like significantly. So that's the key right there. As much as I'm also drawing trend lines, I'm not really looking at, oh, gold retested the trend line. I bought this even before seeing what gold was doing here. So for me, my main interest right here is just focusing on the SAR by itself. So there we go. We have that 5-minute entry. So if you didn't enter on impulse with me, right, this is when I would be entering gold right here if I did not enter where I asked you guys to enter. So this would have been my entry for gold on the 5-minute. But anyway, so we're about to touch that nice 1:1 risk to reward. And you know, if you touch a 1:1, right, if you're risking 0.5% like I was, you'd be up. If you have a 200K, you'd be up like 1,000. There you go. If you're using like 100K, you'd be up like 500. So at this point, go ahead and decide what you want to do, right? I can't force you to set break even, but per our strategies, at the very least, set break even, right? So this trade should be at break even right there. So hopefully that makes sense. Now you can also make a decision to secure 80%. Like for example, for me in this EU trade, I secured 80%. Now, if you ask me what was some of my reasoning for securing 80%, the reason for that was also, it was before New York Open, and I saw like a push up in EU right here, right? EU came literally close to my TP, but I saw this strong push up right here, and I wasn't even looking at the trend lines also, but I saw this push up for EU. So I was like, wait a minute, it's before New York Open. Now, if it was during Asia session, I would have still just let it run. But I was like, hey, this is before New York Open, so let me just go ahead and secure 80% of my profit. So you can decide to secure 80%, 50%, 30%, and leave the other one running. But at the very least, set break even. If you choose not to set break even, just understand that you can come in, or trade can come back and go straight to your stop loss. So personally, I will set break even for this trade. So move stop loss to BE. So I'm already at break even for this trade because New York has already opened. Even looking right here on the hourly time frame, right? This is tweezer bottoms. So this is sort of like a double bottom test. So this is also another example of a test and rejection, but this is on the trend line. So this is not on a on an SAR, but the idea is still the same. It's a test and rejection to the top. So we have more confluences for gold to keep pumping to the upside. Okay, so let me go back to where our entry was. Our entry was on the 30-minute. Right here, the entry was based off of a double SAR. So if I go ahead and extend this, you will see the double SARs right here. And I did send this trade to the Discord before the market opened. So yeah, so it was those SARs right there. All right. Let me know if you guys have any questions. Levy said you bought US 30 and trailed it for a 1:3. That's good, right? You might, oh, this thing pumped up. What was your entry based off of?
On the US 30, it was the if you go to the green lines, the green SARs, you should see a double.
This one? On the 30-minute or what time frame?
On 30-minute. I scaled in on the double, but I was in on the because of the rejections from these down here.
This one or this one?
These up here. See the let me see what is that? 3-4-400? That's psychological.
Oh, this one.
Here?
Oh,
yeah.
Okay, maybe you're not using Oanda. Okay. What chart are you using? Are you using Oanda? Yeah, I mean I can see it, yeah. But for me, since this is not yeah, maybe if you're using Pepperstone like Desire, maybe there was that one. But okay, yeah, no, that's perfect. That is perfect. Yeah, US 30
I went with
is
a light lot for that because it
Mhm.
wasn't certain, but then when it hit the double, I scaled in for a bigger lot. And it went up.
Okay, that's good. That's good. That's perfect, right? So so everybody's goal is to find what works for them. So you can see Levy made profit on US30, right? As much as for me, I was looking for sells or waiting for sells, right? Personally, I wasn't tapped in for any sell because there was US30 did not tap any sells other than, right, that trade that could have ended up at break even. But as Livy mentioned, right, there were other trades on the 30-minute. I'm pretty sure if we go down to the 15-minute, right, 15-minute has a lot. You have
There's a single
doubles.
saw in the 15-minute that was perfect too for entry, but I didn't want to get greedy.
Yeah. Yep. So yeah, depending on what you're looking for, right? You do your analysis and you get in, like that's perfect. Because remember, as much as, for example, we are bullish or I am bullish on gold, right? Doesn't mean that gold is going to go up, right? Candle by candle by candle by candle. Gold will definitely have retracements. Same thing. If EU is bearish, does not mean that EU will sink immediately for every candle. EU will have pullbacks, and right now EU, even looking at this on the 15-minute time frame, EU is pulling back to a double SAR right here. So this can be an example of a test and rejection, right? So as much as you can be bearish on an instrument and be taking buys, right? Because you can get entries for buys and you understand that the market does not move in one direction only. The market does not move sideways forever. So you can be trading both ways, right? You just have to make your analysis and make sure that you're being objective in your analysis and the trades that you're entering are making sense. So let's see if we can hit full TP for this gold trade during this live session. So personally, I'm up. So I made like 0.5% in this EU trade. Where is that trade? I made 0.5% in this EU trade because I secured 80% of the trade right here. So I'm already up 0.5%. Even so for this gold trade as well, I'm hoping it goes up and gives us a nice 1% return. I'd actually be curious to see what, so, okay. So we also had an hourly bullish high and low. So you can see also, right, all of these entries at the very end, like everything that I've given you, whether you choose to use it by itself or in conjunction with other things, you can see that at like for example, right now on this gold trade, this is the we have an hourly bullish low where gold literally rejected from, and we bought, actually where we bought gold was at that hourly bullish low. So you can see, right, they still line up as much as we're not even using the order blocks or the markups, they're still lining up. So you're not really missing anything by first learning the SAR by itself. So you're not missing too much. We have news at 10:30. So what's at 10:30? Natural gas storage. We also have FOMC member speaks at 12. Yeah, I just need this thing to keep spiking up and hit TP, and then we are done. For today. This is the time if you guys have any questions to just unmute yourselves and ask. Let's see.
So I've been, like I said, doing this
Ooh, damn,
new
man.
strategy, and pretty much from what I'm saying, price normally makes a high or a low of the day in Asia or London. Sometimes it may invalidate itself if it takes it out like it did today, like they took out the high from Asia and US 30. But I'm doing a lot of analysis on that, and sometimes it develops like a 3 to 4 day pattern of doing the same thing over and over.
This is good. This is good, man. I know yesterday, I think pretty much all of us were in the red. I was in the red yesterday. I know you were in the red as well. Desire, I think, was in the red as well too. But nice to see you guys coming back up, man. Nice. Yeah, so nowadays it's like if I'm done for the day, if I hit stop loss, I'm like, I'm done. I just wait for the next day, and the next day it's like no need to push anything. Let's see, what else do you have? All right, so with this gold trade, 10-10. So maybe it's waiting for that 10:30 a.m. news. Also, we have that FOMC person speaking at 12. So you can see we really don't have, right? This is like 30 minutes into the market. So even for US, oh, US 30, this is wild, man. This is so wild. Let me see something. Oh, we don't have
That's
any.
crazy. US 30. I literally trailed it right till it started doing that.
Yeah, this is wild. I can't see any entry. I could have. I was hoping to see like some double. I wish this was somewhere, but either way, these candles are so huge. Yeah, this US 30, man. Oh, there goes gold. Finally, we get some action, man. We are getting some action. Come on, we just need 30 more pips and we are at full TP. Come on, pump up. Now, on gold, can you guys see this? We have a possible head and shoulder on the hourly. This, and I do see this as possible. The reason I see that as possible, look at where look at this, right? Go to, give me 1 second, custom period, today. Okay, that's good. Look at where I have my 4-hour buy zone on gold. This is the hourly. Look at where I have my 4-hour buy zone on gold. I have my double SAR on gold at 1908 and 1904. Well, you know what? This is too far apart for a double SAR unless I'm tripping. 1907, 1904. That's already a 30 pip. So you know what? I'm going to delete this. So it's not really a double SAR per se. But if you look at this, this is where the move happened yesterday. So it's around 1904 area. If you look at where this head and shoulder might be completed, is around that 1904 area. So I do see this as a head and shoulder pattern on gold. Now the best thing for me is that my areas to buy gold on the 4-hour, other than this trade that we are currently in, this one right there, my other zones to buy gold on the 4-hour is either here 1922. So we would need 2 4-hour candles to close above 1922 for me to buy gold on the 4-hour. The other time, we would need either gold to retrace back on the hourly time frame all the way down to 1894 and 1893, where we have 2 double SARs on the hourly for me to buy gold. So you can see, as much as I see this as a head and shoulder pattern, either way I'm safe, because for me to buy gold, gold would literally have to break this head. If you see what I mean, gold would literally have to break this head and sort of invalidate this head and shoulder pattern. And on the other hand, for me to buy gold, gold would have to drop all the way to 1894, maybe 1904 area for me to even consider buying gold. So either way, even though gold drops from where it is, hopefully after we've hit TP here, either way, I'm going to be safe because my buy entry on gold is 1922. If 2 4-hour candles close above this zone, which is the head, And in that case, the head and shoulder would be invalidated. Or gold to drop all the way back down to 1894. So either way, I don't care whether, so that's what I mean by, as much as my daily bias is bullish, I don't care if gold drops, right? Because if it's dropping, it's like it's telling me, wait, Michael, I'm coming back to give you your buy entry. But if we do form that head and shoulder pattern, maybe to look out for a sell SAR on the 4-hour time frame. I don't know, maybe on the 1-hour time frame, but I do see that as a clear head and shoulder pattern on the 1-hour time frame. All right, so gold, Audrey, I don't know if you're still holding gold with me. I'm already up. Wait, what account is this? I am up 1600. So up, what is that? 0.75%, I think. Yeah, I'm up like 0.75%. So we need this to, and we should hit full TP. So it's just a matter of waiting. What a trade, what a trade, what a trade. Where did my thing? Oh, I turned them off. Right, and we're coming again into this SAR buys. But always keep in mind that SAR stands or not can stand. SAR stands for stop and reverse. So right, always have that in mind. So let's go. We need to push up. There we go. Man, even my chart is frozen, man. We have some nice liquidity in the markets, man. It just came out of nowhere. That's good. Let's see, does that account, this other account? Oh. Come on, pump up. What's those? Oh, it's because of the US 30 pump. Okay. Come on, gold. If gold gets back up here to this high, I will secure 80% of the position. Only reason I'm doing that is for, right, remember, stop and reverse. SAR stands for stop and reverse. So as much as we are in a green SAR buys, for you to buy or for this buy to keep going on even on the 30-minute, ideally you'd want for two 30-minute candles. But just just keeping that in mind, I will secure like 80% up here. But let's see. So we have 12 minutes. So let's see how this 30-minute candle closes. We just need a nice pump up. So to see this even better, let's go down to the 5-minute. So to see this pump up better, let's do this. Let's stick to the 5-minute for now. So I'm still in. So haven't secured just yet. I like the volume of this candle. Come on. Come on, gold. Nice, nice. Come on, push up. Right, we are like 0.5 pips away. This is so wild. Okay, come on. And we are almost there. Pump up. There you go. Full TP on that one. There you go. Full TP. Close. Full TP for that trade. God, that is so that's a nice 1% return for that trade right there. And with that, I am done for the day. So 1% gain. Wait, did I? Oh, okay, perfect. That is 1.1%. All right. So that's good. So you guys watch this potential head and shoulder pattern. For those of you who held the trade with me, good job. But that should be it for the day. This was the trade, and I will call it a day unless you guys have any questions. Be on the lookout for this head and shoulder pattern. If you do get any validation for the move back down, this is a potential short on gold right here. But personally, I am still bullish on gold, and you can see how that has paid off this morning. But unless you guys have any questions, I will see you guys tomorrow. All right, bye guys.